Okay, so welcome everyone. Thank you for joining us on another episode of the Mindset X Factor podcast. Today we're going to be speaking about preparing for your financial future. I'm Raynor Boreham, the CEO of MCA Training International, and I'm very excited to introduce our guest today, one Mr. Darryn Baird. Give a little introduction here of who you are so that everybody who's listening in or watching knows who's going to be speaking to us today. So Darryn's financial career began after 2 successful years in London managing various hotels. He later joined Sereletse Financial Services as a broker and quickly earned his financial accreditation. In 2005, Darryn acquired the brokerage division and subsequently joined forces with Eddie to form Baird Financial Services. Darryn's strategic leadership and client-focused approach have been pivotal in shaping the company's success. So that's quite the bio, quite the cred that you've got there. So thanks so much, Darryn. It's great to have you.
Yeah, thanks, Raynor. Thanks for the invite, man. We're looking forward to spending a bit of time with you and exploring some of the questions you have. And hopefully, when we're done, we can, some people can obviously take some of the tips and information that we give them to better their financial planning.
Yeah, cool. Thank you so much. Because the reason why I wanted to speak about this topic, and I mentioned to you before, is that I think for many of us, we weren't taught these sorts of things in school, and we sort of like come into the real world where we need to know these things, and we sort of feel so unprepared for it. So the first thing that I think that I'd like to ask you, Darryn, is obviously, here I am in the real world. I know that I need to prepare for, maybe when I stop working, for my retirement, all these sorts of things. I've been told that I need to prepare for that, but I have no idea where to start or what I need to look into. So what would be a good place to start from your perspective?
So, Raynor, I mean, as you mentioned, ultimately, we all know in any business, in any family, in any organization, the finances are the heartbeat of that, organization. So, I always try to tell my clients that the important thing for me to do with you is to educate you, is to try and help you, become a little bit more financial savvy. There's so much information out there. There's so many various vehicles out there. There's so many intricacies that as a layman, would never be able to navigate his way through, saving or understanding where to start without becoming actually financial savvy. So, a good place to start, I always tell people, is to start with a budget. That ultimately gives you an idea of total expenditures, total expenditure, and, gives you a sort of plan. If one doesn't have a plan, and understand, where you're at in that plan and where you want to get to, and ultimately work on that plan, then you're never going to actually change what you currently have. So you're going to find yourself in the position year after year after year. So, the best place to start, I would say, is obviously drawing up a budget and then understanding what goals you have in mind. We have short-term goals, we have long-term goals, we have goals that we need to obviously plan for. And each of those goals require a different, set of savings tools or vehicles. So, I think the first thing you need to start with is ultimately a plan. From there, an organization like myself and my team would be able to advise you on the various vehicles, such as, a tax-free savings plan. I always like to start off with that. I would always advise a client before jumping into anything. The benefits of that is that any dividends, interest earned, remuneration, capital gains is all tax-free. You and your wife and your children are eligible for that tax-free savings plan. And the costs around about that plan are very cheap. They're very accessible. You can find them at banks. You can find them online. You can find them through most fund managers provide them. And that I would say is step number one, is to have a tax-free savings plan.
Yeah, I think you won me over there when you said tax-free. That's the magic word.
Yeah.
Because everything seems to be taxed these days. So if you could get something tax-free, that's always a winner. I think also you were speaking about a good place to start as well is to put the budget together. Again, what would be a good amount of money would you say to set aside for something like this? What is the roundabout figures that we're talking about here?
As a general guide, what we always advise clients is that for every 5 years that you've worked, you need to have 1 year's salary saved. So if you ever want to retire, no matter what you're earning, your income is at whatever stage, but after a 5-year period, you should have 1 year's salary saved up. Whether it be split up between a emergency fund, which is obviously a more short-term savings plan, a tax-free savings plan, a unit trust investment, or even into a pension fund. Cumulatively, after a 5-year period, you should have that 1 year's salary. So it equates to 25% of your 20% of your monthly income that you should be setting aside to savings. And like I said, without a budget and an understanding, firstly, of how much you're actually generating from an income perspective, you're never even going to be able to calculate that, because you would first have to know what your full household income is from whatever sources that may come from. And then, general rule of thumb is 20% to obviously go into a savings vehicle or various savings vehicles.
Okay, great. And then obviously with all of these, investments, these different types of fundings and savings and things that I'm going to be looking at putting my money into, this is my money. It's very important to me that I'm going to be using for this. So, do I need a financial advisor to assist in this regard? And if I do, what should I be looking in a financial advisor? Because obviously I'm entrusting someone with my hard-earned money, this cash that I've worked very hard for. So what would I be looking for in a financial advisor?
Yeah, so, for us and in our industry and in our brokerage, one thing we prize ourselves on is that, we don't ever have to go out looking for clients. We have a track record with clients, and so our clients speak to family members, business associates, friends, whenever the need arises or the conversation arises around investments, insurance, estate planning, tax advice, so I would always recommend that you go on a recommendation first and foremost. It's not something you just want to Google or put on Facebook and ask somebody for a financial advisor. I would approach somebody that I trust, somebody that I know has done financial planning and that has obviously succeeded at it, and who assisted that person with it, so that somebody is obviously recommended. But yes, imperatively, you do need a financial advisor. There are just so many intricacies out there when it comes to costs, various vehicles, different tax loopholes, and rules and regulations and red tape that, no matter where you are, whether you are living on the breadline or whether a high net worth individual, a financial advisor can just assist you with small advice, that can make such a big difference in the end. I mean, we look at some clients and they're in a traditional retirement annuity policy, for example, and between the age of, say, 30 and 40, if they switch that into a unit trust retirement annuity, so you leave it in the same vehicle with the same company, whether it be Liberty or Sanlam, and you just switch it from a traditional retirement annuity into a unit trust retirement annuity, and the cost saving on that is not even 1% in a year, but compounded, over a period of 30 years. If I show you that on a graph and what difference it makes on the maturity value of that retirement fund, it's huge. So without somebody helping you with those small intricacies, that you as a CEO of a multinational training company, you don't have time to go and look at those rules and regulations and find out about all these, small intricacies. And so a financial advisor can obviously be there for you, and a relationship is imperative, a long-term relationship.
Yeah. I like that you said the relationship, because again, it's not a 1 day or 1 week, 1 month thing that you do this for. It's an ongoing thing, because you're constantly looking at these investments that you're making and all that. So it has to be someone that you trust. I agree completely. Someone who has experience in it, I think, is also very important, because of the fact that you said that they need to know what they're doing. They need to know about all the rules, the red tape, the loopholes, and so on. That's things like me, the average person who doesn't have a lot of experience in the financial industry. I wouldn't know about all those sorts of things. So I think it's very important to have someone who knows what they're doing as well, and can give you the right advice, because I think
Yeah,
that's the
and
most
we
important
all
thing as
go
a
through
financial advisor.
and we all go through life-changing events, and all of those events in our life, bring about change in our environment and obviously ultimately in our financial needs and our planning.
Yeah,
We experience death, and we experience divorce, and we experience bankruptcy, and we experience children, and we experience buying a house and going into debt. And so all of these life-changing events trigger, different financial needs. And so developing a relationship with a financial advisor that really can take your hand during any life-changing event can just assist you in that time of need, to give you the guidance and the advice that you may need to get through that time, and obviously plan better for the future, because life is ever changing. And so our needs are ever changing. And so it's not something that you can look at once and leave alone. It's something that needs to be revisited
yeah,
annually, biannually, in order to keep up with our ever-changing lives and some
yeah,
unforeseen circumstances that may occur as well.
yeah. Like a COVID pandemic, as an example, that many of us, I think, can relate to. Um, Darryn, I think I've just got one last question to ask you. And I think it's perhaps one that a lot of people, again, would be asking, and that is, why is it important to do this, to plan for my financial future? Because some people might be thinking, well, what's the point? Is it that imperative? What advice would you give to someone who's still questioning whether it's worth it or not?
Ray, they call us the sandwich generation. We find ourselves in a position where not only are we looking after our children, but a lot of us in our generation have to look after our parents as well. And that puts a lot of pressure on us, financially, and obviously our ability to save as we should. And so we get stuck in a cycle similar to what our parents were in as well, because people, as you mentioned right in the beginning, we're not educated in from our schooling system on financial planning or any financial instruments or saving. We're given very basic tools and an understanding of the financial environment that we're going to step into as adults. And, so for me personally, I look back on the last 20 years of my life and my career, and I realize how quickly time passes by. And so a lot of people think, I don't have any savings, but I'll get there. And savings is one of those things that it's not tangible. It takes a long time. And Warren Buffett, he says one of his biggest regrets is that he didn't start earlier, and he started at the age of 14. So it gives us an understanding that we need time. Compound interest is a wonderful, wonderful phenomenon, but it needs time. And if one's prepared to put a bit of planning into it and make a few sacrifices up front, you really can see in years to come the benefits that come from being financially self-reliant, and not having to then put pressure on your family members or being reliant on others, when life passes each of us by, and you can't be a CEO forever, and I can't be a financial advisor forever, and no matter what, occupation we're in, it's not forever. It's a lot quicker than what we think. And I think each of us know that we want that financial independence. We become used to a certain lifestyle, and we have to ask ourselves the honest question is, do I want to maintain that lifestyle? And am I living within my means at the moment? And would I ever be able to maintain my lifestyle? Should my lifestyle continue as it is now? Or do I need to make a few sacrifices, cut myself down a few notches, and ensure that I can rather maintain a certain lifestyle for the rest of my life, rather than relying on family members or children later on in my life because I never did any planning? We hear from insurance companies now that our generation will live past 100 years of age, and our children will probably live past 150 years of age because of medical advancements. So it puts even more complexity into the argument of, should I plan for retirement? Because if I'm retrenched, or made redundant at the age of 65, and I've still got a good 35 years to go, how much planning is that going to take to keep myself financially, sustainable for those 35 years without an actual income that I've been used to? So, listen, it's extremely imperative. And I think one of the things that's thrown in our face every day is debt, and I would say that's probably the most important thing for us to stay away from. And that costs us the most and sets us back the most in any financial planning is debt. If interest is working adversely against us, it really sets us back so far in being self-reliant financially, rather than using money to, be invested where interest is working for us, and eventually becoming that compounded effect. But it takes education, it takes planning, it takes a whole change of mindset from a person. And it's similar to fitness. I compare it often to fitness. If I decide tomorrow I'm going to run the Comrades next year, my first 3 months of training is going to be hell. The pain, the early mornings, the injuries, and I'll find myself questioning my decision 2 or 3 months into it. But if I stick to that decision, and I hold on just through those first difficult phases of not really feeling the fitness levels improve, my body getting stronger, and everything working sort of positively, I'm going to never achieve that end goal. But if I stick to it, and it's the same as financially. In the beginning, I'm not going to feel any difference. I'm not going to see any difference. I'm going to think, geez, what's this little pile of money that I've got here? But if I leave it over time, the longer I leave it, it becomes actually something quite substantial. And whether that's 100 Rand a month or whether it's 100,000 Rand a month, depending on your income bracket, it takes a long time. But it's about a mindset. It's about commitment. It's about dedicating yourself to it and educating yourself on the difference that it can make for not only you, but generations to come after you.
Darryn, that's fantastic advice. Thank you so much. If people want to get hold of you, how can they find you?
Yeah, so we actually have got a website. It's www.bairdfin.co.za. We are happy to assist anybody who may have a question or may have any information that they're looking for, any advice that they've been given that they just want a second opinion on. I do have an email as well, which is Darryn@bairdfin. Darryn is spelled Darryn @bairdfin.co.za. And listen, we're in the business to help people. We're in the business to build relationships that are long lasting, and to ultimately secure the financial planning and freedom of our clients, and walk a long road with them to see them ultimately succeed in this very sometimes difficult world of financial security and self-reliance.
Darryn, thank you so much. I think it's so important because, one of the biggest stresses we have is financial stress. And if we can help to alleviate that in some way, I think it will always go a long way in helping us to live longer, as you said. I think a lot of us have a lot of issues later on in life because of the financial stress we've been through. So we can have a bit of peace of mind about that. That will go a long way. So thank you so much for all your advice. We appreciate it. And thank you everybody who's listened in or who has watched this podcast. If you've enjoyed it, please remember to subscribe on whichever platform you're watching or listening to this on, and share it wide. If you have friends or family members, loved ones that you feel that could benefit from this, please share it with them. We'd appreciate all of that. And thank you once again for listening in, and hope you all have a fantastic day further. Take care.